Hey, what's going on, guys? Neil here, bringing you a brand new video. Hope everyone's doing well today. Today, I just wanted to bring you guys a new video on the inflation numbers, what that means for you moving forward, and how the Fed is expected to react. So, inflation has jumped at its fastest pace in nearly 40 years. Yesterday morning, the inflation numbers came out, and December 2021 year-over-year increase was 7%. So, as you can see, inflation has rose extremely quick since 2020. They're saying that inflation could ease as Omicron wave fades and as Americans shift more of their spending to services such as travel, eating out, and movie going. That would reduce the demand for goods and help clear the supply chain. Powell told Congress that if it becomes necessary to fight high inflation more aggressively, the Fed Reserve is prepared to accelerate the interest rate hikes it plans to begin this year. The Fed's benchmark short-term rate, now pegged near zero, is expected to be bumped up at least 3 times this year. Rate increases would make borrowing for a home or car more expensive and therefore to help to cool off the economy. So right now, or even earlier last year, interest rates were extremely low when you're trying to get a loan on a car or home. I know some people that refinanced their loan on their home to basically 2%, which is extremely low. Now rates have gone up since then, and they're planning on hiking them. It seems like a few times this year. And some economists and members of Congress fear the Fed has acted too slowly to heat off inflation. This could eventually force even sharper rate increases that could damage the economy. So, if the rates are increased, that could negatively impact the economy and the overall markets. So, it's just something to think about moving forward. And I wanted to talk about rent and housing prices as well. So, rent in 2021, national average, it's up 21.3% year over year on one bedrooms. Two bedrooms is up 16.7% year over year. So that's massive, as obviously we need to rent or buy a home. It's part of our shelter and a cost of living. And the house in December 2021, home prices were up 15% compared to last year, selling for a median price of 382,000. So as you can see this chart, if you pull back up December of 2020, you can see it's right about here, and then now it is where it is today. So housing is pretty important when it comes to that. I like to think of inflation as strictly for each good or service. That's just the way that I process it. So when I think about homes or food or energy, I like to think about those numbers separately, and they've gone up a lot due to this whole supply shortage and many other factors that have affected it, as well as high demand, of course. So I want to talk about this alternate inflation chart that I found here that I thought was interesting. This is obviously not my own research, but in 1980, there was a methodology that was employed, and they changed how they calculated CPI. So if we were calculating CPI currently based on the 1980 CPI calculation, we'd be closer to about 15%. Compared to about 7%, which is the numbers they put out for 2021. So just some food for thought, and this is their public comment on it, saying that CPI is no longer measured as cost of maintaining a constant standard of living. CPI no longer measures full inflation for out-of-pocket expenditures. With the misused cover of academic theory, politicians force significant underreporting of official inflation so as to cut annual cost of living adjustments to Social Security. So this is just some things to think about. They have a whole long article written here on what the changes did to inflation, the maintaining constant standard of living versus substitution CPI, the way that politicians wanted it, the way that was. So this is just an interesting article and just something to think about moving forward here, thinking about the inflation numbers. Obviously, it's not my research. I've not confirmed any of this, but I just wanted to pull this up. So let's see how some of the markets have reacted to it. Some of the benchmarks we're going to look at is Bitcoin and S&P. So Bitcoin, when these numbers came out about 8:30, had a nice bounce up. It's kind of cooled off since then. Bitcoin's been in some extreme downtrend, and so a lot of consolidation going on here at this 40,000 level. S&P was, I believe, up right when the market opened, and has kind of come back down since then due to fears of rate hikes. So I think that the S&P is, I think some of these things are priced in, right? The rate hikes, but depending on how big these rate hikes are, that's going to definitely impact the markets in an interesting way. So something to keep an eye on is, how much they continue to print and how big the rate hikes actually are. So I think these next few, months to even up until the summer are going to be really interesting to watch for the markets overall. And lastly, I just wanted to cover what is the inflation definition and what it could mean for you, right? So inflation is the decline of purchasing power of a currency given over time, and it's the rate at which the value of a currency is falling, and consequently, the general level of prices for goods and services is rising. So whatever you had 1 year ago, let's say in December 2021, you had $10,000 in spending power. Now, today they're gonna have 9,300 in spending power according to the government CPI calculation. So it's just something to think about. You know, cash is not the best thing to hold, as there's tons of other investments that you can make. Obviously, you need enough cash to maintain your lifestyle, and you want to have cash on hand always to deploy capital in new investment opportunities that you might see, or if you're in an asset class that takes a major hit and you think the thesis hasn't changed, that would always be a good time to add, right? So always keep a certain amount of cash. I always tell people personal finance is called personal finance for a reason, because it's not one size fits all. Everyone has different goals, needs, wants, etc., risk tolerance. So definitely keep that in mind and do your own research when it comes to any investments. And yeah, this is what I wanted to cover today. Inflation is really high. They kept saying it was transitory. Now it's seeming like it's not, but they're going to try to actually ease it. So let's see what the Fed does here moving forward. It's going to be something to keep an eye on. If you guys enjoyed this video, I'd really appreciate if you could leave a like, comment, subscribe, and share the video. It really goes a long way and helps me out a lot. And check out my links below to check out my socials or get some free stocks or crypto in the chat just for signing up. I appreciate all the support. Hope everyone has a great day. Thanks.